back in Washington today. It is the last day of testimony for hundreds of U.S. brands pleading against imposing new China tariffs. Among those making their case this past week, the maker of clothing, strollers, flashlights, and electronics, just to name a few. And joining us now is the CEO of baby safety products manufacturer Evenflo, Jon Chamberlain, who testified last week. It is worth noting that Evenflo has significant domestic manufacturing here in the U.S. already, producing car seats, baby gates, and other products. So, Jon, what were you asking of the U.S. government? What were you testifying about the impact to your industry?
Sure. Good morning, Sarah. First, thank you for having me on. The industry was asking for our opinion, obviously, and Evenflo is kind of in a unique position. Next year, we'll be celebrating our 100th year anniversary of being an American brand. And we compete globally from Piqua, Ohio, where we have a leadership team that makes car seats. And we do that without the benefit of a tariff. Obviously, as we've looked going forward, we're a little concerned about the predictability of the business. And so we've made an aggressive play from a supply chain standpoint in the last 6 months to move some of our component parts into areas of the world so we can help mitigate the cost to consumers if these tariffs do go through. So that was my testimony last week at the USTR.
So does that mean you can deal with it if we do see the next leg of tariffs go through on the $300 billion of imports?
It does. From a car seat standpoint, absolutely. So we're prepared for that. On the stroller side, we think that's a more difficult challenge. The infrastructure to put it in place in the Americas or Mexico even is very capital intensive. The payback really isn't there, and it would take quite a bit of time to get that up and running. So we're asking for some relief on strollers, but we're saying if you go ahead with the tariffs on car seats, we'll be able to support the American consumer and keep the increase to be very minimal.
Why are so many baby products made in China?
Well, obviously, there's a tremendous labor advantage, and historically, that has been the principal reason.
I mean, I wonder if we would see higher prices if you had to, say, move some of that manufacturing to Vietnam. Is that even possible where Carl is?
Yeah, it's interesting. I've been watching a segment this morning, and the infrastructure still has to develop. I saw the numbers. Obviously, there's an awful lot of investment that has to occur. And so it's not an easy transition. Some component parts certainly may come from Vietnam, but if you're talking about large-scale manufacturing, I think that's years away.
How much would the price of a stroller go up if you didn't get the exemption and we did see the tariffs go through?
Well, you're probably talking high teens, somewhere 15 to 20%. You're looking at a 25% tariff as it's proposed right now. So those are on component parts and sometimes on the full product itself. So you'd be looking at high double digits, that 15 to 20% range.
And that all goes to the consumer? I mean, strollers are already so expensive, hundreds of dollars.
Yeah, well, we're doing our best to try to mitigate that. And that's why I talked about car seats and what we're doing on car seats to try to lower the intake cost so we can be doing a better job with that consumer of keeping that overall retail price where it's very manageable. Strollers, a little bit different, and that's why we're asking for the exemption.
Yeah, I mean, what goes into trying to sort of not raise price the same amount as the tariff when you talk about sort of working with your suppliers, or what is that what is that actually about? What is that conversation about?
Yeah, how efficient can we be? Are there things we're just not taking advantage of today that they would offer us that maybe historically we haven't had to look at? Now I think with the proposal the way it is, you look at everything a little bit more aggressively than you have before. And so we're always looking to mitigate that cost increase to the consumer. Certainly our retailers don't want us to pass it on, so we work with them as well. So a combination of suppliers and retailers, we try to create value that still stays where the consumer can appreciate it.
Is it conceivable, I know, that if you don't get these tariffs, but you do get those efficiencies, that your margins actually will end up improving as a result of sort of this focus you're talking about?
Absolutely. I think that's fair. That's one of the benefits of the byproducts of the intensity around trying to offset the cost due to the tariff. So we could see that. We also may share that with the retailer longer term. So, but short term, absolutely, you would pick up some margin if the tariffs do not go into effect.
So you said that you were shifting production for car seats into the U.S. Why can't you do that for strollers? And how much more expensive is it to produce here in this country?
Yeah, the capital investment would be huge, Sarah. That's the principal reason, and it can't be done quickly. And there's really just not a very good payback on that capital.
What about the fact that, so is your parent company a Chinese company? I think you're a subsidiary of Good Baby, which is a Chinese company. Explain the sort of complicated structure of your business and whether you're caught in the crosshairs of this trade friction.
Yeah, we're very fortunate. Our founder, Chairman Song, allows us to absolutely make the decisions we need to for the local markets. He's very supportive. When he bought Evenflo a few years ago, he left all the manufacturing in place in Ohio. He saw that as a competitive advantage for us. And so he gives me the autonomy to make the decisions that are right for the local market.